Markets swung, tech stumbled, and the shutdown drama faded. But now the question is risk truly back, or just on pause? Hi, I'm Invest to Financial Freedom, and in the next 6 minutes we're diving into the most important stock market moves from November 10th to 14th, 2025. What drove them, how sectors behaved, what you might want to watch next week. On Monday, November 10th, the major U.S. indexes jumped as optimism rose over a possible end to the government shutdown. The S&P 500 climbed to 1.5%, 103,063 points to 6,130 points, 40. The Nasdaq Composite surged part 2.3%, priced 222.64 points to 23,027.7, its best performance since May. The Dow Jones Industrial Average rose as 0.8%, published 153 points to 47,368.63. The Russell 2000 gained 0.9% to 202,455.65. But despite the rebound, underlying weakness remained. For the week of November 3rd to 7th, the broader market had already posted declines. So the story, one-day bounce, but caution still lurking under the surface. The rebound was led by big tech and AI names, e.g. Nvidia Corporation jumped 5.8% Monday after last week's sharp drop. However, concern remains over stretched valuations in AI-exposed names. The ongoing U.S. government shutdown delayed key economic data releases, creating a vacuum and uncertainty. Private sector data highlighted mixed signals. The ADP Research Institute reported pleasant 42,000 private sector jobs in October, nearly double expectations. On the flip side, consumer sentiment dropped to a 3-year low, raising alarm bells. Finally, the Senate's vote to advance a funding bill gave markets hope that the shutdown might end, boosting global risk appetite. Global markets rallied alongside U.S. equities as the shutdown worries eased. Technology and communication services, volatile, dragged by valuation concerns around AI. Healthcare, real estate, energy and financials held up better during the weaker stretch. Small caps, Russell 2000 saw only modest gains, showing the risk rally may have been concentrated in large caps. Note, in commodities, crude oil prices fell again amid rising inventories and production. Nvidia was the headline mover, leading the rebound after last week's slump. Other AI semiconductor players such as Taiwan Semiconductor Manufacturing Company also saw gains, just 3.1%, after strong revenue growth. On the flip side, health insurer names like Humana Inc. and Centene Corporation declined amid uncertainty over expiring healthcare tax credits tied to the shutdown. Earnings season. Overall, about 61% of S&P 500 companies beat estimates, above historical averages. Key takeaway: even though the index numbers stabilized, the mood behind the scenes is risk on with caution. 1. Earnings. Nvidia reports Wednesday. This is a make-or-break moment for the AI trade. Retail giants. Walmart Inc., The Home Depot, Inc., Target Corporation, among others. 2. Economic as policy data. Many delayed government metrics, jobless claims, CPI, PPI, housing data, may resume now that the shutdown has ended. Flash PMI surveys for the U.S., Europe, Japan on Friday will be key for central bank watchers. The minutes of the Federal Open Market Committee October meeting will be released. Could offer clues on the rate cut path. 3. Risks, themes. Will the return of full data flow reveal surprises, good or bad? Can the AI tech valuation theme hold up if earnings disappoint? How will small caps and risk assets behave if underlying jobs, housing data soften? Watch for global central bank decisions. US, UK, Eurozone all have key policy signals ahead. Message 1. The index numbers may look fine now, but the internals are mixed. Large cap tech is carrying much of the lift. Breadth is still weak. Message 2. The reopening of data flows, Post-shutdown introduces both opportunity and risk. Surprises could trigger sharp moves either way. Message 3. With valuations rich in tech and AI, upcoming earnings and data will be the catalyst, not broad bullish sentiment. Strategy thoughts. If you're long, keep exposure moderate. Earnings risk is high. If you're tactical, watch for breakout or breakdown around earnings stunt or data. Small caps could be a lead to watch for risk appetite. Use the economic data week as an inflection point, e.g., a weak consumer at housing print might tilt sentiment. Recap. Last week saw a rebound driven by tech and relief hopes around the shutdown, but structural concerns remain: jobs, housing, valuations, data gaps. This week, November 17, 21, could be decisive depending on earnings and the return of reliable data. What to watch? NVIDIA earnings, retail earnings, flash PMI prints, FOMC minutes, initial jobless claims. Final thought. The market may be transitioning from waiting for data to reacting to data. And that means higher potential for volatility. Thanks for watching. If you found this helpful, hit like, subscribe, and ring the bell so you don't miss next week's wrap. Drop your thoughts below. Which company or metric are you watching closely next week? Until then, trade smart, manage risk, and I'll see you next time.